Wednesday, May 22nd, market analysis. Stan Ehrlich, good morning, 9:49 California time. We start out with the indexes and go to futures and sometimes sectors, forex, crypto, cycles, variety of things. So the E-mini June futures contract is stalling out so far, right around 5,348.5. I think today's high is exactly 49.25, 30, 53, 49.25. That is a new high by a tick. So the highs of the last 5 previous trading days, 4 of them have been almost exactly the same price. Now, true, the lows are generally moving up while the tops are flat. Now that indicates a flat top right triangle, and the flat sides are normally what's broken. But if you add in the fact that we are overbought and we are hovering around the previous highs that we had in early April, then you have the possibility of a broader double top formation over a couple of months or so, a month and a half. And the break of yesterday's low, especially on a closing basis, especially if it's by a substantial amount, would constitute a double top developing. On the other hand, closing above today's highs, which again is the highest high by a tick for the whole trend, would constitute a bullish breakout, possibly. I say possibly because I don't like being bullish when you were already overbought for several days. So I'm looking for a break, but I'm not finding it. It's not coming. We're down very little, nothing to speak of. I need to get below yesterday's lows and stay there, close there, and drop off a bit more in order to be excited about the market moving all the way back down. Oh, I don't know, to 5190. There's a support area around 5125, and my downside objective at this particular point is 5014, give or take, support areas. Next chart, we're looking at the 1 minute E-mini. As you can see, that's the 15-minute, E-mini. The highs of several days ago were almost exactly the same 2 days later, and again 2 days later today. It's obviously got substantial amount of selling there, but is it going to be enough to start to push it down and stay down and close lower? Stay tuned. Spider, it's going to be the same story for most of these indexes, but not necessarily the Russell, for example. So here we are, new high ground, and we're staying there for about over a week now. But with the spider, we have a gap to close at a little bit lower level. Now, true, that gap, if it's closed, is right smack dab at previous important highs, which is support. So what we might do is come down, close the gap, and then turn right back up again, getting out of overbought conditions, which we are in right now, and then turning bullish. So this is getting a little tricky here, in my opinion. How are we going to handle gap closures and support on little minor dips when I'm frankly expecting a little bit more of a decline from overbought conditions and possible double top formations? This doesn't look quite as good a double top as the E-mini, but not out of the question. Let's look at the 5-minute spider. You can see the resistance here in the last several days, 1, 2, 3, 4, 5, 6 days or so, stalling out. And you can see my support levels drawn off of old highs a month and a half ago, and the little gap area right in here as well. So they're about the same prices. They overlap. Ultimately, before or even into October, which is quite a ways from now, time-wise, I'm looking for a move down to the April lows. And it wouldn't surprise me if we even got lower than that in October. Next chart's the QQQs. New high ground, it's staying there. We're overbought though, and it's the same story. Looking for downside corrections well below previous highs of the last six weeks or so ago. And we're looking at the Q 5-minute chart, not quite the same. As you can see, in the last 6 days, we had a high, and then we did make a higher high, and then we made another higher high, not by very much. Nevertheless, still creeping up, and we're still up a little at the moment on the Qs. Not quite the same story. Let me squish this a little bit so you can see the bigger picture. Those are the highs a month and a half or so ago. Yeah, beginning of April, middle of April. And here we are toward the end of May. So well in the new high ground, but I don't like this overbought condition. And there was a small gap. Let's look at the NASDAQ real quick. Q's futures contract, NQ. We're a new high ground, and we're staying there for the last couple of days. And we're not seeing any downside pressure yet. But I'm warning you, some of these things are overbought and you've got a higher high, and all we have to do is drop not too damn much, and you're going to be below yesterday's low all of a sudden. That's going to constitute a major bearish red ER sell signal, which is going to mark, in my opinion, the beginning of the break I'm talking about. Next chart is the NASDAQ short-term 5-minute chart. No particular indication at the moment that anything bearish is starting. So like frequently, I'm a bit premature here. So I've got to be proven right before I can go yay. Let's see what happens next here. The Russell, completely different story. Daily data chart, major resistance for the last couple of years in this red zone. And even going back further, it used to be support. Then it turned into resistance, 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 resistance again and again and again. And now overbought a couple of days ago in resistance. And it looks like it's starting to turn down, but not very substantially and not very large amount. And the Russell 1-minute chart, we don't even have a lower low today than yesterday, but there's no higher high either. And we're sort of in a neutral situation too, I think, a little on the bearish side. Next is going to be the YM Dow Jones futures contract. We got the top of the market on April 1st. Bearish engulfing ER sell signals. Straight down to the bottom of the market where we got an ER buy signal smack dab at the bottom. And I love that when we get a top and bottom straight away. No complications in the middle. The bottom produced a very good rally up to and including, what is that, Friday? Oh, I'm sorry, Monday. This is Wednesday, when we had a bearish engulfing ER sell signal, and so far so good. We're down a little on the day, 36 ticks. We made a lower low for the move down for the last 4 previous days. It's moving down. What can I say? Is the YM a precursor to the other indexes? Well, I hope so. We're going to find out soon enough. Bonds, or I'm sorry, the YM 5-minute chart, 5-minute, right? Did make that lower low and a little spike bottom here just a little while ago. Our trailing stop on the position is coming down, almost locking in, not quite yet, a profit. We had a very small day trade scalp with a very small profit a couple of days ago when the signal happened for ER1 scalp. And ER1 overnight is a very small loss at the moment. We'll see what happens. Now bonds. Back into the channel, but not really dropping much. In fact, today's low is a tiny bit lower than the last few days. And currently, we're basically unchanged, up a tick, but below the top of the channel, which we broke for 1 day, but hit resistance and pulled right back into the channel after being overbought at resistance. And now we're back in the channel. This is looking like we're going to be going down to 115.5 to maybe 114.5. I can't rule out lower than that in the next week or two. Next, notes got overbought, hit a resistance line, not a zone, but a level, and stopped on the 16th. Great, last week, classic. Told you it might at the time. but I didn't get any reversal price action, no signal per se. We got one on the bottom of the market back here in October, and we got a sell signal here, but it wasn't very profitable, a very small move down. Not much since, not even any other signals. So it's been a while in bonds. What about the notes? And this is the notes. I'm sorry. So not a signal for quite a while in notes. All right, let's go to beans. And in the grains, so far we've got 4 out of 5. We picked the bottom. Beans, not oil. Yes, in meal, corn, and wheat. So here's the buy signal, the green candlestick at the bottom in a support area for double bottom formation. So far, so good. It looks like it's going to make another new high very soon. First stopping point on the way up, getting overbought again, I think, is going to be about 1270, maybe 1280. Next stopping point is possibly going to be around 130567. Oh, wait. And then even higher. Bullish on beans, of course. Oil. There's 2 things wrong with this head and shoulder bottom formation. So far, the head and shoulder bottom is working correctly, but I don't like 2 things. One is the formation's larger than normal. Usually these formations are a month to 3 or 4 or 5 or 6 to be small to medium, maybe a year to be fairly big. But a year ago, we just had the head of the formation form. And a year before that, 2 years ago in July of 22, we had the first shoulder low. So this is a head and shoulder bottom that's larger than normal. So I'm skeptical about it. And it is forming at the end of a sideways trading range, which normally head and shoulder bottoms are at the bottom of a bear move. This formation is so bullish. There's even a third problem. I got to tell you that, let's see here, the approximate upside objective, and I'll measure it for you real quick, is going to be from the lowest low, of course, straight up to where the neckline is. And now I have to give you an educated guess as to when the breakout might take place. And that's sometime in the future, way in the future, months from now. But I'll tell you 90. That is huge. That's a double from where we are right now at 46. That's unbelievably bullish. So I'm a skeptic. The neckline is the dashed yellow line. It is almost exactly the same as the major bear trend line. That's interesting. I don't see that too often. What about soybean meal? Well, we got the bottom of the market to the exact day on February 29th. We recently had a high and it was overbought. So we got a correction, and very, very nicely so far. It bottomed out about 3-4 days out of 7, 4 out of 7 days, almost at exactly the same price. That's unusual, not unheard of. I think bonds did it a while back. But we're still hanging in there. We're up 18 ticks at the moment, almost making a new high for the last few days. I really need to see a close around 376 and higher to be a little more aggressive about new highs real soon. But that's what I think is going to happen. But I don't see quite enough strength to justify it and make you believe it's going to be happening. A close below 365 is not good for the moment and probably will drive it back down to 341 and jeopardize the longer term trend to a degree. What about corn? We bought the bottom to the exact day, February 26th, green, bullish, engulfing. You know this is a 100% automated trading system. There's nothing I do but basically watch. I can change the speed at which the stop is moving in order to lock in a bigger profit faster or slower for investor types. But scalpers and swing traders are relatively quick to grab the money and run, so to speak. So I like what I see. It's coming along great. And that's corn. Lastly, wheat got the bottom to the exact day, March 11th. And today we are seeing another new high for the trend. I told you on May 15th, when this bearish engulfing happened, that I didn't trust it very much for a couple of reasons. One, you had a little bit of support. Well, a little better than a little, a significant amount of support just below it. And it did come down and get very close to the support area. 2, I really like the way this longer term bottom is developed. So I'm still bullish, and now I'm vindicated because we have a new high, a second day in a row. And as long as there is no major reversal today, and we're down a couple of ticks at the moment, 5 ticks, I think it's going to turn right around, turn back up and close stronger, starting to make new highs again, maybe before the end of the week. Okay, what about cattle? Well, we reached the resistance area yesterday, and today we're testing the high of the resistance area, 181.5. Currently trading 181.35, so we're right there, high and last, basically. There's nothing wrong with it going through that. I don't have any sell signals. I only have an overbought condition at resistance, which does imply it's going to turn down a little, but it hasn't happened. So don't jump the gun. 80 is pretty high on the RSI, 79.64 at the moment, but there's still, a little elbow room. This is where it becomes a little fudge factor. Hogs, new lows today, looking good. The bullish signal was the same thing upside down I said in cattle. I didn't trust it. In this case, because of the head and shoulder top formation I outlined before it even broke out to the downside and breaking the neckline. The minimum downside objective I've been saying from probably about the date of April 25, maybe April 26, 27, 28, 29, is downside objective 49.5, we'll call it. 94, not 49, sorry, this is my dyslexia. 94.5. And I'm liking it. I mean, for the second day in a row, we got new lows. We're currently trading below all previous lows. We're now about 2/3 the way down to my minimum objective, but we are a little oversold. So I'm not opposed to seeing a little bounce, not much, maybe back up to 100 or so, and then new lows. And we may not have a little bounce. Remember, bear markets fall apart faster than bull markets go up. And we're going back to the E-mini for a quick check here. We're down 24, nothing really happening. I'm going to flip over to TradeStation now for the exotics in New York. Energies, crude, buy signal and a possible double bottom. Can't really come to a very good conclusion at the moment for the next few days with the movement, but I do favor the downside. Why? There's the shoulder. March 19th, the head of the formation is a little double top by itself, and that's around April 10th. And the last shoulder high was on April 26th. When it broke the neckline, it broke it in a classic fashion, big, strong down move, or weak, I should say, down move. Classic. The retracement, I believe, was yesterday's high. Bad close, not terrible, but lower on the day. And today we've dropped off, making new lows for the previous 3 days. The next move is to make a new low for the whole move down. My minimum objective is about 74.5, and it could go lower than that. Remember the minimum objective. I do not want to close or even get back up to 80.60. I think that's now gone. If it does, I'm going to start to be wrong and have to make adjustments. Now, we've got an outside trading range up in natural gas. New highs. Getting towards some resistance, which is around 2.90-ish. That's right, right around in there, because of previous highs back on January 9th. I think we're about to have a correction back down, and it probably will be to 2.4, maybe a little lower. We have been and still are overbought, and fairly significantly. Yesterday's high level was 88. That's quite a bit overbought. So looking for a correction here. And we're looking at the heating oil, HO. What was that one again? Natural gas. Okay, heating oil. Maybe making a small bottom formation. If it holds here for a couple of more days and starts to work its way back up, that would be a shoulder low. little premature to start talking about that, but I did anyway. But it's a stretch. So I'm not confident about that comment. I'm looking for a lower low, probably, and in the next few days, probably. Next, we're going to go to gold, silver, platinum, copper. Double top in gold. Now looking a lot more interesting. The downside breakout, and I'll measure it real quick here for you in TradeStation, trend line, click, and you're going to take between the two highs, the average, and I'll get rid of that little extension just a second. There we go. And let's duplicate this line real quick so I can grab an end of it. Like, I know what happened. I hid this line up here by accident. Okay, that's good. And then grab this new line to the lowest low and swing it over to straight up to the high right there. And that's the depth of the formation. Now you, doggone it, stay put. There we go. You'd grab this and you pull it down below, too far. There we go. The lowest low between the two highs. That's the depth of the formation I just measured. So my objective is 2,118 on the downside, 2,115, period. If we have a double top, it looks like it's starting. Overbought conditions, topped out, about the same prices. So far, so good. Next, we've got overbought condition like crazy in silver. We're down on the day quite a bit. I think there's a decent chance we're going to see this market drop off into new low ground very soon, maybe yet today. Now getting below 75 in the RSI, coming out of overbought, but the high today was still over 75. So that's why the prices are colored yellow and the RSI indicator is colored yellow. This is my custom RSI. I learned RSI from Wells Wilder himself and George Lane. He taught me stochastics in the 70s and 80s. So, and both of them have passed away, unfortunately, old friends, particularly George. So we're looking for a move down, I think, to a very bare minimum of 30 and a quarter, but I do think it's going to drop off somewhere from that level, even down to maybe as low as 26 and a quarter. Then we'll see what happens. Next, platinum. 2 days ago, I screamed bloody murder, bearish engulfing, ER sell signal at the top of the market in platinum. Down day yesterday was not that big a deal. Today, it's becoming a bigger deal. We're coming close to yesterday's lower lows since the signal and perpetuating the likelihood the signal is going to be profitable more so than it is now. I like what I see. I've got no change of opinion. Yesterday's low was a very minor support area. And again, I'll draw the little line here for you. Where's my trend line? There it is. Off of this high right here. And that's why I'm saying what I'm saying. So that is about horizontal. Good. And that's yesterday's low. Minor support. You can also draw one off of the high here on April 12th. Minor support, not much lower. The real support is starting not very clearly, probably in the ballpark of 968. Let's call it under 970. Next chart is high-grade copper. Well, overbought has got to it now. We're now all of a sudden making new lows for one previous day, 2, 3, 4, almost 5 previous days, not quite, but 4 previous days, yes. And it looks like it's going to close down here and maybe even make lower lows again before the bell rings. Like what I see. Looks like it topped out. First downside objective is 4.6918. Next one's going to be 4.4634. Next one is way down in here. Next, overbought conditions, OJ, anytime this should turn down, and I'm going to say big time. My first downside objective is 383 and a half. Higher it goes, the bigger it's going to fall, in my opinion. RSI is way, way, way up here at 93. It's going to happen this week, I think. Today's Wednesday. And we're going to sugar. Large, very large, head and shoulder top. I'll resize this so you can see the pad a little bit better. Double shoulder, slanted upward over approximately, let's say a month and a half, almost 2 months. The right shoulder is also a double high and downward slanted over approximately 2 months. There's your symmetry. The head of the formation is also a double sort of, and it is over a little over 2 months. So it's fitting the picture. Downward slanted neckline broke out several days ago. Classically, every move we have had so far have not violated any rules about going above or closing above, thank goodness, the neckline. We're now down substantially today, like yesterday's minor decline, and about to ruin my buy signal, which I didn't think was going to work in the first place because of its location. So I made excuses for it not working, and it looks like that was a good excuse, but it's not ruined yet. We haven't hit the yellow dots, and we haven't closed below the low of Monday. When that happens, it'll be a new low ground already. Well, how low can she go? Well, the minimum downside objective is 13.5. There's your sugar. Cocoa, then the last one, cotton. Now, we made new lows to the trend Monday. We've bounced a little bit. We're not oversold, so this is not unusual. It doesn't mean too much to me whatsoever. It might even go up a little bit more, but I think it's about to turn down into new low ground very soon. Maybe this week, but probably between now and the end of next week. Lastly, cotton the rag, or coffee, I'm sorry, forgot my morning coffee. We got a very strong rally. We're almost overbought. Looks like a 50% retracement, just eyeballing it. Not quite sure that's exact, but ballpark, a fib number. From the low we made, which was a minor double bottom, first low was oversold at a support level. No surprise. Rally's nice, but not that big a deal. Will it stop going up and turn back down is the big question. We're almost overbought, right around a little bit of resistance. There's not too much up here. So I think it's going to stop rallying just a little bit higher and then turn back down. And lastly, cotton the rag made new lows to the move a few days ago, got close to oversold, almost very, very close. And there was a buy signal, but remember, my buy signals are not always the bottom like that one and tops like that one, although it was a minor high. That's a great low. That's a minor high. The reversal signals are frequently part of a topping out or bottoming out formation or price action that doesn't have any particular formation. But they are also frequently those lowest lows, like this one, the beginning of the bull move, and that lowest low again. That's why I developed the ER signals system. You guys have a great day. Profitable trading to you. I do offer mentoring for those people that are interested. Go to my website, www.ersignals.com. Signing off.